G'day everyone, welcome back to Pete's Investing. Today is June 3rd, 2023. This is the spot gold price update. On our weekly, we're still just breaking down into a neutral positioning from being long, and on our daily, we're broken down into a bearish signal. So first off, on the weekly, we combine a triple moving average of the price chart with a moving average on the CCI 150. They're still not aligned, and it's giving us this neutral signal, but it looks like it's turning down in the coming days possibly. But on the daily, it's already broken down into a bearish signal. You can see with that big bearish candle, it's now approaching this key support area at 1932. And also we've got this resistance up here at 2082. We did have this rectangular target area, which was hit back a few days ago after this bearish divergence on the CCI versus a bullish divergence on the price chart. The price actually broke through that upwards diagonal trend line and it hit this initial target area, and it's now bouncing off this, or potentially bouncing off this support area at 1932, as I said. And that's that happens to coincide with the just below between the 50% and the 61% Fibonacci retracement of that wider range. If I zoom into the hourly chart, you can see there more closely. It's now on that Fibonacci retracement between that range. It's bounced off that 38% 1981 level a couple of times, and it's now bouncing down or turning down, and it looks like it may go further to further declines for a couple of reasons. Number one, there is no sign of support above this major support at 1932, but also if I draw a Fibonacci between that low and that high, you can see there it's broken below the 61%, which is always a key area to look out for. There's no guarantee it's going to continue down, of course. There's never a guarantee in charting, but it could possibly go further down, or it could possibly bounce from here, but that's a key area to look out for whenever it breaches that area. So at the moment, we're still pretty bearish on, short-term bearish, I should say, on gold, but that's how you would look at it in the next few hours at least. But in terms of, I've also got up here a back test going long only during this whole period, and I've deliberately shown you the effects of your drawdown or your profitability. This is your profitability chart. If you average down, we don't use stop losses. So as you average down, you add to your positions until it finally breaks above its average price, and you get out with a profit. Now, to avoid that drawdown effect, as I always say, you must always follow the weekly and daily indicators as I've got hit down here. So for example, back here in April 22, you would have back here, you would have avoided going long during that period because the daily was in decline. And likewise on the weekly chart was in decline as well. So predominantly short trades should have been taken during that period. So you would have avoided taking those long trades. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page where we look at also getting special requests by subscribers to look at stocks in particular for their analysis. We also scan weekly for stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.